The following segment is sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp. Is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
Well, it's great to be with you.
We saw a sell-off a couple of days ago in gold, and it looks like it's recovering. Silver had a similar downward dip, and perhaps not as severe. Silver is less speculative and more of a safe bet than perhaps risking in gold currently. What are your thoughts?
I think it's actually, percentage-wise, I'm not certain. I'm both sold off. I think actually percentage-wise, maybe silver did a little more. I mean, basically on the open, silver open in New York, silver was trading around 33.80, and it dropped all the way to 32.80, just almost within a cat's whisker of that. So it dropped to almost $1. I think it was 95 cents. And then it bounced back up to about 33.60 and closed the New York market somewhere like 33.73 or something like that. So the point being is it really sold off sharply. It recovered rather almost as sharply. And today, as we're doing this interview, we have recovered, I think, just about everything, and gold as well. So what this tells me is that this sell-off, orchestrated or not, and you can make the argument orchestrated, and the reason I say that with a lot of confidence is it was options expiration. I've got on record as saying you can set your watch with options expiration, meaning that you always see this kind of wild gyration on options expiration because the professionals usually win. They're usually short options, meaning expecting the price to come down. They can maneuver the price down to capture profits, and then the price can either remain down or continue down, or it can do anything. It can come back up. But to me, it's a typical options expiry gyration, greater than some we've seen recently, and it's all part of what goes on in these futures markets, especially, I'd say, in the precious metals markets and gold.
When that began to happen, did you see it for what you stated it was?
Yeah, it wasn't a surprise to me. As you know, Ellis, I've been in the commodity sector, but primarily focused on the precious metals for most of my life, and I've seen this option situation again and again and again, and so not a huge surprise to me, no.
Do you take advantage of these big dips as they're happening, or is it something that you just sit out completely?
Depends. I'm not a day trader. I'm actually not that good at it. I'm pretty confident in my skill level on swing trade or position trading. I like to take a position and hold it for weeks or even months and make a lot of money rather than to try to bet that, we caught a bottom at 33 and it's going to come up 70 cents, which of course would be a huge day trade. But no, I usually just let the dust settle, so to speak, and get in where I think the risk is less, even though the price might be higher.
And what about silver ETFs right now? How do you think they're trending?
Sideways. There doesn't seem to be as much interest in the SLV and the GLD as there was when they first, came out, and then for a couple of years subsequent to their initial issuance. I think that most of the players that are using the SLV and the GLD are in and out of the market, and they use that as a trading vehicle. And there doesn't seem to be a lot of new interest in those markets. And I'm speaking specifically to those two. Whereas if you look at some of the holding companies like, for example, Central Fund of Canada or the PSLV, the Sprott Physical Silver Trust, they just keep accumulating, not on a weekly basis or even a monthly basis, but any given year. There's usually an offering, and they are filled or sometimes oversubscribed, and more physical metal comes off the market, which is, one of the main points I have emphasized throughout the years, is that the price setting mechanism is based on a paper price. It's basically really a theoretical price, but yet the physical metal does sell at those prices, give or take some kind of a variance. So what's happened is you have more physical demand, and that's what you really have to have a key to. We have seen the paper market setting the price, but ultimately the physical market sets the price. So this is something that, no one can forecast exactly, but I think we're getting closer, pretty confident, that the physical market is really tight in the silver market and in the gold market, and that these derivatives markets certainly move around a great deal, but I think the day of reckoning is coming sooner than later. It's certainly been, a long ride from the early 2000s to 2012, 2013, but I don't see this continuing another decade. I think we've just got a few years at most ahead where the physical price and the derivatives prices are much different. And this is going to be sort of the moment of awakening, you might say, for people that do not really look at these markets or the metals markets very much. They're going to see, why is this discrepancy here? What's going on? And whether the mainstream financial press picks up on it or not, we'll have to wait and see.
We'll be right back. The Ellis Martin Report is sponsored by El Tigre Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. Silver has been considered a precious metal for 6,000 years and currency since 600 BC. It's been commercially mined in Mexico since 1530 in mineral-prolific and mining-friendly Sonora State, where El Tigre Silver Corp's 5,000-meter drill program is now underway. El Tigre's properties with gold and silver mining concessions span approximately 267 square miles. With an attractive share structure and a strong, proven management team, El Tigre Silver Corp is poised to identify a resource in an area that from 1903 to 1938 produced 75 million ounces of silver and 380,000 ounces of gold. Additionally, their tailing stockpile is currently progressing to production. Learn more about El Tigre Silver Corp by visiting their website, eltigresilvercorp.com, or click through El Tigre's logo on the homepage of our website, ellismartinreport.com.
We offer expert opinions only. Find them on our website, ellismartinreport.com. That's ellismartinreport.com.
And we're back. Do you see any parabolic rises in silver coming? And if you did, would you advise your subscribers to take advantage of them as selling opportunities?
I don't see any parabolic rise in silver soon. I don't see it by the end of this year. We might get a mini one in the first quarter of 2013, but that wouldn't be enough to get me that excited. But there will be one. There'll be one, I believe, that will make the 1980 market look tame. Time will tell if I'm right. And that move is hard to forecast. I'm thinking somewhere between 2014, 2016. But I think that move in silver and gold, particularly in silver, is going to go into the record books. It's going to be something that's phenomenal. And the reason for it is many-fold, many-faceted. But primarily it's going to be, one, what I just discussed, the physical supply is going to be way too small to meet the physical demand, so that will be the primary driver. Then on top of that, you will have the industrial usage problem. That means that people that use just-in-time inventory, like Dow Chemical and all the auto manufacturers and a lot of the electronics manufacturers, are going to say, oh my goodness, silver's hard to get, and if we don't have it, we're out of business. So they'll be rushing in at the same time investors are rushing in. So that's a compounded situation. And then lastly, the MOMO traders, and the MOMO traders, the momentum traders. So they'll run into the derivatives. They don't really care about the physical market, but they see something moving that much, they will add in demand pressure from the paper side. So you'll have all these demands coming in at one time, and what the exchange does will be interesting to see. Regardless of what the exchange does, there's always demand for the physical, and that will command, I think, separate from the derivatives price, and this is where you see what the real demand for silver is in the physical form, regardless of what the derivatives markets are showing.
Given what you're suggesting is coming, one might want to take new positions in some of the junior mining stocks, especially silver companies.
Yeah, I think the stocks will really be the place to be. The metal, of course, would be very good, but I think the stocks will be the safest and the best risk-to-reward ratio and the biggest gains. And also, I'm going to ask a question of myself because I think it bears on what I'm saying and maybe can make it more succinct. I just started a new web page on our website, silver-investor.com, and what I say in there is one of the most important points, that 90% of the move comes in the last 10% of the time, and that's the idea. It might be 70% of the move, and it might be in the last 12% of the time, but the point is very simple, and that is, if you look back in history at 1979, silver started the year 79 at about $6, and a year later in January 1980 it was $50. So that's the kind of move I expect silver to make. Now, whether or not it goes up 8-fold in 1 year or not, I don't know. What I am suggesting and very much think will happen again is that this market, meaning the precious metals markets, both gold, silver, platinum, palladium for that matter, are going to get in that parabolic move that you asked me about. And it is going to be the big one. It's going to be really, really big because the demand is going to be astronomical. It's going to be a world demand, not just a U.S. demand. It's going to be for physical in a lot of ways, and it is going to be something that I don't think the demand can be met. So that means that the price is going to decide who gets it and who doesn't. And we'll see. I certainly can look at this in a way that, try to be objective. Obviously, I'm biased toward the monetary situation at hand. I mean, the reality is that we're in a debt-based monetary system. They've never worked. They always have problems. They always get to an end point, and the way they end is usually not pretty. And we are close to that. And again, when that happens exactly, I don't know. I think we've got a couple of years left, and then I think it's Katie bar the door because it's going to be a free-for-all in the monetary markets. Now, I don't think it's going to be forever. I don't think silver and gold are the place to stay forever and a day. I think that silver and gold will get overvalued, not necessarily in paper terms, although you could think of it in those terms, but primarily in their purchasing power. When an ounce of gold buys an astronomical amount of goods and services, then it's time to take an objective look and say, I made this investment, and what can I use with this investment to buy a different investment? It's time to cash out. And that day is ahead. I really, really believe that. The problem I have currently, and especially at the time, is where do we go? But I'm thinking of that now, and there's always opportunities out there. Even in Great Depression, there were opportunities. In fact, there were a lot of millionaires that came out of the Great Depression because these are people that were able to think outside the box and supply the market with something that was needed, and they did very well. So I don't really let the financial conditions put me in a place where I get all that concerned. I mean, certainly there's concern, but not overly. I think you have to stay grounded and objective no matter what the current weather conditions are.
And you always manage to do so. David, as always, I've enjoyed our conversation. I look forward to speaking with you again in the near future. Thanks for joining me today on the program.
My pleasure. Thank you.
I've been chatting with metals, mining, and money expert David Morgan. His website is themorganreport.com. Listen to this segment again on the podcast page of our website, ellismartinreport.com. This segment has been sponsored by LT Gray Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com.